Well, as you may have noticed, gas prices have been falling recently. It's happening not just here at home, but also overseas. And in this morning's U.S. Bank Economic 360, Business Courier publisher Jamie Smith talks with U.S. Bank Vice President and Senior Portfolio Manager Mike Dennemann for perspective on this trend that will hopefully continue. Mike and Jamie.
Thanks, Peg. Mike, thanks for being here today.
Good morning.
So let's talk about this. Gas prices dropping pretty steeply. Why?
Steeply and quickly, too.
Yeah.
If we look at the national average this past week, gas was at $3.15 a gallon, which is down considerably from where it was. And just a few months ago, we had gas up near $4 a gallon. We all remember that this past summer. So that's come down quickly. It's come down pretty dramatically, and it's a trend that's likely to continue as well. We continue to see gasoline futures on the commodity market fall further, and analysts are predicting that it could be another 15 or 20 cents to the downside.
Really?
So it might not be long before we're seeing gas below $3 across the country. So this is not uncommon for the price to fall once we get past Labor Day and the peak summer driving season. So the gas falling is not what's surprising, but the fact that it's come down so far so quickly has caught a lot of people off guard.
Okay, is there any significant reasons why?
Well, we can pin most of the blame, if blame's the right word, on the price of oil.
Okay.
And right now, much like we saw with the price of gas, the price of oil is pretty much fallen off a cliff. Just a month or so ago, it was about $110 a barrel. Now it's trading at roughly $80 a barrel. So that's a sharp decline as well. And most of that is wrapped up in just the global supply and demand. On the supply side, there's a glut of oil out there. Right now, we're producing far more in the U.S. than we have in recent decades. Our imports are at near historic lows since the 1970s. Most of that's due to the hydraulic fracturing and the natural gas and the oil we're producing here at home. Then on the supply side, there's a lot of worries out there right now about an economic slowdown in China and in the Eurozone. So globally, it's anticipated that we'll use a lot less oil in the next 12 months. So we've got supply rising, we've got demand falling, and the combination of those two lead to oil prices dipping pretty significantly.
Well, typically when we talk and you talk about numbers going down, it's always iffy. Is it a good thing for the consumer or is it not a good thing for the consumer? Obviously, lower prices is good for the consumer, but is it good for everything?
Yeah. So really, we're going to see this have a ripple effect across the entire economy. For the consumer, indirectly, well, oil is a key component of just about everything that we do in our economy. Rather, if it's a input is in terms of raw material, whether it's transportation costs. So just about everything we buy at the store has petroleum priced into it somewhere. And then directly, if you're paying less at the pump, you've got more money in your pocket. It's that simple. Most of us drive a relatively fixed amount of miles every week. So if gas prices are going up, more's coming out of your wallet. Conversely, if gas prices are going down, you're going to have more disposable income. So we should start to see that accumulate as we go further through the fourth quarter. And it really couldn't happen at a better time. I mean, really, we're just a few short weeks away from the holiday shopping season.
I was going to ask.
So people with more disposable income, they're going to do more holiday shopping. That's really going to be a nice tailwind for the economy as we move through the fourth quarter. So again, it's a trend that looks like it might continue. And if that does, then we should expect better than expected fourth quarter GDP and retail shopping numbers.
And it's still a little bit ways off, but as you said, we're getting close to the holidays. I know summer's a lot of time traveling. Do you think that's going to affect the holiday travel? Air versus driving somewhere?
It certainly could. When you look at the cost of the typical airline ticket, a good portion of that is due to jet fuel prices. So if we've got oil falling, if we have fuel prices falling, that could lead to lower costs there.
Great. Well, I don't know about you, but I'm going to take the savings that I have in gas and I'm going to go play golf. Does that sound good to you?
That'll help everybody.
All right, great. Thanks for being here today. Peg, back to you.
All right, thanks, Jamie and Mike. Nice way to tie two segments together.